Hey there, just want to send across my weekly market update for the week of May 18th through May 22nd. So starting off with the national headlines. So right now we're in the peak pending sales season nationally right now. So you'll see the most homes that go under contract for the whole calendar year, in this kind of period that we are in right now. So buyer demand is outpacing inventory growth for the first time we've seen year over year. So we are seeing a little bit more buyers out there than we have in the past. The market is more active in 2026 than it was at the same point back in 2025. We are seeing rates rise again, but demand is still high, despite the little added pressure of the mortgage rates rising. Other than this is the most important selling window of the year, and it is open right now for you guys to put your property back on the market. And then inventory and housing supply. So we did see the national single-family inventory rose to 761,000 to 767,000 this week. So a little bit more inventory hitting the market. Year-over-year growth is still 1.49%, down dramatically from 33% growth at the same time last year. So new listings come in above 80,000 for the second time in 2026. So the total housing inventory sits around about 1.47 million units nationally, equal to 4.4 months of supply. At the national level, we are seeing 4.4 months of supply still qualifies as a seller's market. Inventory is trending towards net negative year over year, meaning supply is tightening up. Buyer demand and pending sales. So we are seeing, like I said before, this is the seasonal peak for pending sales right now. From this point forward, pending activity historically kind of declines for the remaining of the year. Mortgage purchase applications are up 4% from last week, and then 7% higher than it was this time last year. So we are seeing people apply for mortgages more than we have in the past. Purchase applications volume is up for the year overall, a sign of growing buyer activity. Once again, first-time buyers make up 33% of the market. About 1 in 3 purchases are going to be first-time home buyers. Demand is stronger than it is in 2026, that is it was in 2025 across all kind of key indicators. And then when it comes to pricing and seller competition, so like I said at the beginning, it is a good time to list your property. Right now, we are seeing median existing home sale price come in around about $417,700 in April, which is up 0.9% for the month. Only 36% of sellers are cutting their prices, essentially meaning that essentially the same as 37% last year, which is considered normal. Sellers are not panicking on the price. They're kind of like the market is still supporting stronger list prices in certain areas of the market, especially here in Houston. We are seeing a lot of properties go under contract that are kind of testing the market in certain areas and pockets of Houston. The 250,000 to 500,000 range is kind of moving the most inventory nationally. So we are seeing that kind of price range being the most sought after. $1 million plus homes are seeing some of the largest percent increases in sale activity as well. We are seeing that locally as well. A lot of our new construction is going under contract that we have seen. Expect medium home prices to set a new record by late summer if the current trends hold. And then we are seeing inflation, jobs, and the economy. The CPI came in at 3.8% year over year in April, the highest reading since May 2023. So CPI stands for Consumer Price Index. Basically, the prices consumers pay for goods. So energy prices are the main driver, up about 17.9% over the past 12 months. Wholesale inflation came in around about 1.4% for April, nearly triple what economists expected. Real wages fell 0.5% for the month, meaning that paychecks are not keeping up with the rising costs of goods. Jobs remain strong, 115,000 jobs added in April, more than double expectations. Unemployment holds around about 4.3% right now. The Fed is not cutting rates. Markets are showing that a 98% probability of no change at both the June and July meetings. So strong job data plus rising inflation gives the Fed no reason to kind of lower the rates anytime soon. And then a couple more slides here. Obviously, what does this mean for buyers and sellers? So for buyers, inventory is thinning. More buyers are competing for the fewer homes compared to this time last year. Rates are nearing a yearly high. Every dip is an opportunity worth kind of acting on quickly. Demand is rising, which means waiting is likely to be creating better conditions later in the year. For sellers, obviously this means this is the best selling window for you guys. Pending sales peak right about now, so it does decline till the end of the year, like I said at the beginning of these slides. Buyers are active and motivated. Well-priced homes are moving fast. You do not need to cut price to compete. Only about 1 in 3 sellers are doing this right now. So obviously there's different factors you look at. You look at web traffic. You look at if you have an open house, how many open house guests come by, how many showings are you getting, and those are the kind of the 3 factors that you kind of put weight on when you're making a decision if you're going to be dropping the price. If you've been thinking about listing, the timing is right now. Obviously, it works in your favor with the amount of buyers and inventory we have on the market. So last thing I want to talk about was going to be the mortgage rates, affordability, and economy. The 30-year fix rose, below 6.5 and then to 6.56 this week, near its year-to-date high. The year-to-date high remains around about 6.64, set in late March. The 10-year Treasury hit its highest level in 90 days this week, so we'll keep a upward pressure on the rates. And then one key factor helping buyers, the spread between the 10-year Treasury and the 30-year fix has improved compared to last year. Without that improvement, rates will be above 7%. Rate volatility is real. When rates dip, the window to lock in closes quickly. Realtor.com's 2026 forecast of 6.3 for the 30-year fix is looking kind of optimistic given the current data. And then I just want to kind of share, exact stats from today's, mortgage rates. This is from, straight from the website, Mortgage News Daily. So the 30-year fix right now is 6.67. It is down from a day ago, but it is up from a week ago. 15-year fix is at 6.22, and then 30-year jumbo, ARM, and VA all going down day over day, but gone up week over week. But obviously, we'll keep you posted on next week's trajectory. But anyway, hopefully you found this helpful. Like always, reach out if you have any questions about your specific market or specific home. Talk soon.